Hi guys, welcome back to my channel. Thank you so much for tuning in. In today's video, we're going to talk about hard money loans. What are they? Who are they for? Is it something you should consider? And all the pros that come along with getting a hard money loan. So keep watching. Thank you so much again for watching my video coming to you every single Friday. If you haven't done so already, please hit the subscribe button, hit the like button if you're enjoying these videos, and please leave a comment if there's anything that you would like to learn about when it comes to real estate and mortgages. Please let me know and I'm happy to make a video about it. So I just did my first hard money loan. The clients that I typically work with are first-time home buyers, people who already are homeowners who want to refinance their home. But I recently had a client who is an investor and he required a hard money loan to get this deal done. So we had to do it and I learned a lot about it. So I'm going to share with you guys what I learned and if it's something you guys should consider. So a hard money loan is a loan that you can get really, really quickly. You can get a hard money loan in about 1 week. Typically, to get a mortgage to buy a house and get a loan, it takes about 3 weeks to, get the loan done. Okay. So some of the benefits of a hard money loan are it's very fast. Okay. It's quick. You can close in 1 week. Another benefit of hard money loan is that there's no income documentation. Okay. So it doesn't matter what you make. Basically, you are getting a loan based on the property, right? So the investor, as in the person who's giving you this money, because these are private people. It's a private person giving you a loan to buy a house. Hard money loans are short-term loans. They're 12 months to 24 months. If you have to pay it off within that time period, okay? So they're not long-term solutions. So they can close very quickly, no income documentation. So that's one of the benefits. So for example, if you are an investor, okay, this is something you might want to consider getting a hard money loan, okay? Because some investors, don't have income. They don't have tax returns. They don't have steady income. So it's hard to get a loan, okay? So someone who's an investor, that might be a good idea to get a hard money loan, okay? The other reason you might want to get a hard money loan is because if you are trying to buy a property and it's very, very competitive, there's a ton of offers. There's 10 offers, right? So hard money loans are basically like a cash offer, okay? So if you get a hard money loan, it's basically like putting in an all cash offer. It gives you a better chance of getting the house because it only takes you 7 days. So to the seller, whether you have $1 million cash or can get a $1 million loan in a week, it's the same thing. But if you present a seller, hey, I'm going to get a loan, it's going to take me 3 weeks. A seller who wants to move on their property very quickly, you're not even going to get a chance to buy that property because they're going to be looking for someone who has all cash or is getting a hard money loan. Okay. So in my case, the recent hard money loan that I just did, it took 1 week. All we had to do was submit a loan application, basically just showing the borrower's name, social address, residence history, things like that. Very, very simple. And there needs to be an appraisal. That's the only other requirement. And a credit report, obviously. So you have to have a credit report, a loan application, and an appraisal, and you can get a loan. Okay. So those are the benefits. It's fast. It only takes 1 week and you close very quickly. And it's just like cash. You don't need income documents. Okay. So those are the benefits of a hard money loan. Okay. Now the downside of a hard money loan is they're more expensive. There's more fees involved. There's a higher cost to getting a hard money loan. So when you buy a house, you normally have, your regular title, escrow fees. And if you haven't seen my video on what are closing costs when you buy a house, you can check it out right here and you'll see what the closing costs are when you buy a house. So in addition to the regular closing costs when you buy a house, a hard money loan is going to cost 1 to 2% in fees or points. Okay. Unavoidable. This is where the person giving you this money makes their money. So if you get $1 million loan, it's going to cost you, in addition to your closing costs, it's going to cost 1 to 2%. So it's another $10,000 to $20,000. Okay. Now, if you see a property and it's undervalued or has a lot of potential, like, hey, if I buy this property, do a little bit of changes, I can sell it and make a huge profit. Hard money loan is perfect for that. And you will suck up the fees. You will suck up the 10 or 20 grand if you can sell it, or if you can rehab it and live in it, and you buy it for $1 million and you think, hey, if I put a little bit of work, it's going to be worth 1.5 easily. That extra $10,000 or $20,000 is worth paying that fee because you're getting a really, really special property with a lot of potential. So you will recoup that money either short-term or long-term. Okay, so whether you're an investor, you want to buy the house, we fix it up a little bit, right? Little things, paint, hardwood floors, things like that, landscape. If you're like, hey, I buy this house, do these little things, and I'll pay the extra points on the loan, and I'm going to buy a house for $1 million, put 100 grand into it, and it's going to be worth 1.5. Hey, you just made $400,000. Not bad. So it's worth it to pay these extra fees. If you need a quick loan, if you don't have income, I don't know why I'm snapping my fingers. If you don't have income and you need to be competitive, right? That's the other main thing people don't realize is if you see a property that's $1 million and you're like, wow, this is a great value. It has a ton of potential. I guarantee you there's other people, tons of people who are going to be thinking the same thing. There's a lot of people, especially in the big cities, in LA, San Francisco, San Diego, any of these metropolitan areas. If you see a property that's undervalued, chances are there's 100 other people who are also seeing that property, who also think it's undervalued. And if you want to compete, because there's a lot of people with money out there, right? There's people that are going to put all cash offers. So if you want to compete, a hard money loan might be your only chance to get a property like that, or else you have no chance. The seller's not going to, they have cash offer after cash offer. There's no way they're going to consider your regular financing and 21-day loan or 21-day close offer in that situation. So that's pretty much it. That wraps up my experience on the hard money. It was pretty smooth. My clients, were kind of in that situation where they got a house with a really good value. The regular loan that we were planning on doing fell through, and we needed a loan in about 5 days. So we went the hard money route and we were able to accomplish that. They were able to get the house. They'll be closing on it probably today or tomorrow. So congratulations to them. But yeah, that wraps it up about hard money loans. They are short-term loans. Again, I want to reiterate, they're short-term loans. It's a hard money loan is not something you can get and hey, it's a 30-year fixed loan. They're 12 to 24 month loans. So you either have to sell the house or you have to refinance within that 12 to 24 month period. Okay. One other thing I forgot to mention, in addition to it being a higher cost loan, it costing 1% to 2%, the interest rate's really high too. Interest rate's going to be about 8 to 10%. Okay. So again, this is not a long-term solution. It's just a way for you to get the house. And the other thing I forgot to mention before I sign off here. So the other thing about the hard money loan is it can be refinanced immediately, right? So again, if you're planning on, let's say, staying in this house, you're going to live there. You can use the hard money loan to get it and you can pay it off immediately. You can refinance it immediately. You can sell the house immediately. And there are no prepayment penalties, okay? So a prepayment penalty is a penalty the bank enforces if you pay off the loan in a certain period. You always want to ask your loan officer or whoever's helping you if there's any prepayment penalties when you buy a house. That means you have to keep the loan for 1 year or 2 years or 3 years. So with hard money, there are no prepayment penalties. You can get the loan, the next day you can pay it off, and you're totally fine. No penalties. So please let me know what you guys think. Was this video informative? Did you learn anything from it? Do you know anyone who's an investor? Are you an investor? Is this something you would consider? Or any questions at all? Please leave a comment below. If you haven't done so, please subscribe to my channel. I'm coming out with videos every single Friday about the real estate and mortgage industry. So anything you want to know about buying a house, whether you are going to live in it, whether you're an investor, or you already own a house and you want to refinance, or anything real estate related, mortgage related, please leave a comment and I'm happy to, get your feedback and make future videos to address some of your questions and concerns. Thanks again, guys. Have a great day and I'll see you guys next time.